distinguished guests from the World Bank, and also dear audience and viewers from China and around the world. This is Huiyao Wang. I'm chairing this actually webinar, special webinar event that we're featuring the Global Economic Outlook report that actually done by the World Bank. First, I would like to introduce our featured presentation speaker, Dr. Ayhan Kose. He's the acting vice president of the EFI Practice Group and director of EFI Prospect Group of World Bank. And Dr. Kose has many years of experience at World Bank already. He managed operation policy and advisory engagements in the bank's global practice of finance and competitiveness and innovation. Macroeconomics, trade and investment, governance, and poverty and equity has a very wide range of portfolios. He also leads the bank's policy and analytical work on the global macroeconomic outlook, financial flows, and the commodity markets. Under his management, the Prospect Group produced the bank corporate flagship report, Global Economic Prospects, in addition to other policy and analytical publications. So this morning, we're actually going to hear from Dr. Kose on this Global Economic Prospect report. And then Dr. Kose also has written extensively on international macroeconomics and finance. So many articles have been published in the leading academic journals and featured in prominent media outlets. And his latest book, Global Waves of Debt, just 2019, analyzed the likely consequences of the post-crisis debt accumulation in emerging and developing countries. So we are very fortunate to have Dr. Kose join us actually at such a already late time in Washington, D.C., to share his latest report to the great big audience here in China. So Dr. Kose, please, your presentation. Thank you.
Thank you, Dr. Wang, and good morning, everybody, our audience in China. It's great to be, joining you. Unfortunately, again, virtually. We are hoping that you will come and visit Beijing and do this event at the center sooner than later. And I'm very pleased to join you today with my colleagues, senior economist Ika Vashakmadze. She is our senior East Asia Pacific economist, and Patrick Kirby, senior economist who works on global outlook, trade-related issues. And then, of course, I'm very happy that our China country director, Martin Reiser, is with us, and I greatly appreciate Dr. Yao Yang joining us to discuss our views today, and I look forward to the conversation with all of you. Let me quickly share the presentation we are going to deliver. Can you see the presentation? Everything is good?
Yes.
Okay,
yes.
Excellent. So we have these analytical pieces in addition to outlook pieces. But today for the discussion, I would like to focus on 4 questions. The first question is, what are the near-term growth prospects? And there, the basic message is that there is recovery. That's good news. We will see growth this year, but the recovery is going to be subdued. And this recovery is taking place against the backdrop of forecast downgrades in most emerging market developed economies and low-income countries, and the risks still tilted to the downside. The second question is, how has this pandemic increased debt-related risks? And these risks were there prior to the pandemic, and the answer is that we are already in the midst of the kind of the largest debt wave we have seen in modern history, and there was a significant increase in debt, and the low growth prospects complicate the risks associated with that dynamics down the road. The third question is, how has the pandemic worsened growth prospect for the 2020s? And our assessment is that we have a more pronounced potential growth slowdown in this decade. We were expecting a growth slowdown in this decade, in potential as well as in actual, but now because of the pandemic, we think that the magnitude is magnified of that slowdown. And we might be getting into a period of persistent growth disappointment. So the policy is critical, how policymakers are going to respond. And the fourth question is that what are policy priorities? In the near term, of course, we need to address the health crisis there. It is essential to distribute aggressively and vaccinate the large segments of society as fast as possible. And then even the medium and the long-term reform priorities in a number of areas going to be critical. Throughout the presentation, I'm going to use this acronym EMDs, and that stands for Emerging Market and Developing Economies. Let me start with the first question. What are the near-term growth prospects and how we see the global economy? Now, when we discuss the global economy in June, we were thinking that, yes, there was this very aggressive wave around March, April, and then hopefully we wouldn't have another wave in the winter time. Unfortunately, that prediction did not work out, in the sense that around the world over the past 3 months, we have seen a very aggressive spread of the pandemic and the new strain, even with the faster transmission and the challenges in advanced economies. There you see the kind of the developments in the US, in Europe, and of course, in the case of emerging market developed economies, on the right, you see in many regions still the confirmed daily new cases remain very high. And in some cases, of course, when you look at sub-Saharan Africa, when you look at South Asia, we still are grappling with the magnitude of the problem because of the limited testing capacity and consequences of that for our ability to gauge the true magnitude of the health crisis. So this background, the fact that there is another wave underway, had a huge impact on our growth outlook. As I said, there is growth this year, and that growth around 4%. But relative to our earlier forecast, we downgraded our growth number by about 0.2 percentage points. That's mostly because of advanced economies. We downgraded our US forecast, we downgraded our forecast for the Euro area, given the kind of the latest aggressive wave in both economies. And of course, in the case of emerging market developed economies, we have this growth number, 5%, and that 5% masks a number of different growth outcomes across regions and across countries. As much as we upgraded our growth forecast for emerging developed economies for 2021, in certain regions, for example, Europe, Central Asia, Middle East, North Africa, and of course, Sub-Saharan Africa, we downgraded our growth numbers. Just to remember what happened last year, if you look at, our growth projection, the last year, this minus 4.3 is somewhat, a better outcome than what we predicted in June, but still, it is really a terrible outcome. The fourth deepest global recession we have seen over the past 150 years. This somewhat better outcome is mostly due to advanced economies performance, as well as the performance of East Asia Pacific at the back of China. So all in all, growth is back, but still by the end of this year, we are going to be lower than what we were expecting prior to the pandemic in terms of global output. And the fact that, we won't be able to get back to the pre-crisis trend for the foreseeable future tells us we are basically going to experience a subdued recovery. Now, I mentioned this issue of this 5% number masking differences across countries and across regions. There, of course, when you look at East Asia Pacific this year, our growth number is 7.4%. This is a number this region used to deliver easily, but of course, the last year the growth number was around 0.9. But even that 0.9 was much better than what we saw in other regions. For example, in Latin America, Caribbean, in Middle East, North Africa, in South Asia, these regions experienced basically recessions they have experienced for a very long time. So a tragic year in terms of health outcomes and in terms of economic outcomes behind us. The new year is bringing growth, but still we are not out of the woods yet. Now, let me turn to these differences we see in the context of emerging market developing economies. So I mentioned this 5% number this year, and then in 2022, we think that number is going to be around 4.2%. But if you take out China, the story is quite different in the sense that with China's growth, we are expecting 7.9% this year, and that really elevates the aggregate for emerging market developing economies. So if you take out China, growth projection for this year looks much more modest. For low-income countries, the real recovery is going to come in 2022. Now, how good these growth outcomes relative to the growth expectations we had 6 months ago, and the figure on the right tells you our answer to that question. As you can see, for the majority of countries, we downgraded our growth forecast for 2021. And for majority of countries, actually, growth outcomes for 2020 worse than what we expected. But at the aggregate, some big countries delivered stronger, basically, growth numbers and than what we expected, or milder recession. So the last year ended up basically with an upgrade. And this year, especially in advanced economies, for the majority of them, because of the second wave, we downgraded our forecast. And for emerging market developed economies as well, we became more pessimistic for 2021. And that shows basically with almost 75% of economies were subject to downgrades in 2021 as well as in 2020 relative to where we were in June. Now, one of the big points we are trying to make in the new report is the kind of the very serious collapse we see in investment. And there, if you look at the numbers, at least for advanced economies, the investment collapse looks somewhat milder than what we saw in 2009. And for emerging market developing economies, it's a totally different story. The investment is contracting about 5% this year for the whole emerging market developing economy group. But if you take out China, contraction is larger than 10%. So the having a kind of a 10% collapse in investment is just something we have not seen these economies experiencing any time in modern history. And of course, this collapse in investment is coming after a period of weak investment outcomes. And we are thinking that for the foreseeable future, at least till the end of 2022, emerging market developing economies, excluding China, will not go back to the investment levels they had prior to the pandemic. Including China, of course, the story is different. The China growth number in the case of investment as well is very strong. The story will be different. The fact that investment collapse and the foreseeable future gonna remain weak have significant consequences for this growth story for the medium term. We will discuss very soon. Now, this portrayal of the near-term outlook comes with significant downside risks. The first risk is the risk, actually, we are already experiencing, intensifying pandemic and the possibility of new waves in different parts of the world and the difficulty of containing the pandemic. The other issue is that the single most important policy priority is the vaccine deployment, and a delay of vaccine deployment or the resistance to get immunized in a substantial part of the population could create all types of challenges for the global economy to overcome the pandemic and basically become, in a sense, immune at the kind of the aggregate level. We are also worried about the possibility of financial stress. It is essential to avoid that, but debt levels are at record high. I'm going to discuss not just for sovereign, the government debt, but as well as corporate debt. And there is forbearance measures in many countries, moratoriums for debt paybacks. And of course, sooner or later, these measures are going to be removed, and we might end up seeing a wave of corporate bankruptcies in many countries. There are some other challenges. Of course, in some parts of the world, there are these serious problems associated with food security. And down the road, as I will discuss soon, we are worried about larger than expected decline in potential growth because of the damage associated with the pandemic. And as much as we see the light at the end of the tunnel because of very effective vaccines available now, and we are hoping that the deployment is going to gain traction in many countries rapidly, there is the possibility of lasting change in household behavior that leads to, consumption being away from services and tourism, and that there are certain changes in consumption patterns that will require adjustments in sectors and productions. And all of these could create all types of challenges. If people do not basically demand these types of services they are demanding at the levels we saw before, or tourism is not coming back. Of course, these countries, they rely on services, they rely on tourist revenues, will continue to have difficulties. And weaker than expected trade and foreign investment flows, and the social consequences of the pandemic are important risks we need to monitor. Let me turn to the second question. How has this pandemic increased debt-related risks? Prior to the pandemic, global economy was experiencing a debt wave. Basically, we have not seen in modern history. Now, because of the pandemic, of course, the governments provided fiscal support measures, and these fiscal support measures required a significant increase in debt levels. These measures were necessary, but at the end, what happened is that we saw a jump in government debt levels. In the case of advanced economies, we have not seen since the 1970s. In the case of emerging market developing economies, the jump was at a level we have not seen since the late 1980s, during, these economies had a series of debt crises. Of course, when you think about the magnitude of this debt wave and compare with previous debt waves, you see that it's just basically not comparable in terms of its magnitude, in terms of its pace, and in terms of how broad-based it is, how synchronized across economies. Now, this creates all types of challenges, given that we worried about the debt problems before the crisis, and these debt problems now magnified, especially in the context of low-income countries. Some of them are already in debt distress. Debt is now much higher, basically increased significantly from 2019 to 2020, above 70%. In fragile low-income countries, the number is even higher. But more important, the debt service capacity is lower. So if you think about, what happened, debt to government revenue ratio in these economies, the increase was like 100 percentage point in 1 year. Of course, driven by the collapse in output, combined with a significant increase in debt levels. So the debt to revenue ratio increased somewhere around 400% to 500%. And our projections suggest these economies are going to continue struggle going back to pre-pandemic trend level of output for the foreseeable future. That means their ability to pay back this debt is going to be, impeded. On the one hand, the amount of debt very high. On the other hand, you have this, limited revenue base, and of course, you are having difficulty to generate growth. So all in all, the big question for us here, this crisis started as a health crisis. Already, it is a very serious, real economic crisis, but there is a possibility it will turn into a very serious financial crisis. At least in the case of low-income countries, of course, we are worried. And the global community already responded with the debt suspension initiative. There is this now initiative by the G20, the common framework. Of course, the World Bank Group supports these initiatives, work with member countries to resolve the debt-related challenges. Now, what is interesting in this crisis, a number of emerging market developing economies did something they have never done before. They started buying assets to stabilize domestic financial markets. Asset purchases in these economies were much smaller than what we saw in advanced economies relative to their GDP. And at the first approximation, these asset purchases were successful in the sense that they were able to stabilize financial markets. Of course, this success came in an environment there was unprecedented accommodation and liquidity available in global financial markets, helping these economies to stabilize their domestic markets. Now, we are worried about these asset purchase programs in emerging market economies, primarily because the history of these economies financing basically their deficits through central bank asset purchases. Now, a number of these economies have better policy frameworks. A number of these economies are able to basically think through the consequences of these asset purchase programs. But at the same time, when we look at the kind of the universe of these policies, the fact that still the policies in terms of their scope, in terms of their duration, in terms of their objectives are not very well defined. And the fact that, they are still in place while we no longer have the kind of the financial market volatility, all cause for concern. as we are worried about the kind of the debt dynamics, the fact that there is this unconventional policies used by emerging market economies worries us. Now, let me turn to the third question. How has the pandemic changed growth prospects for the 2020s? Now, before the pandemic, when we thought about the potential growth over the period 2020s, we were expecting potential growth to be lower relative to what we had in 2010. This wasn't a kind of a surprising observation because advanced economies are going through a productivity slowdown. Emerging market developing economies going through a productivity slowdown. There is kind of a set of structural headwinds, especially in advanced economies, demographic transition leading to kind of a very smaller labor force that has consequences. Of course, this is a big challenge for a number of major emerging markets too. Now, on top of these things, as I mentioned, investment growth has been slowing prior to the pandemic and now collapse. Now, we think that in the post-pandemic period, we will see even lower potential growth in the 2020s. And this will be the case basically across the board in all regions, including East Asia Pacific. We will see a weaker potential growth in 2020s, and that has consequences in terms of creating jobs, that has consequences in terms of creating, wealth. Now, one important observation is that how these developments going to affect long-term growth expectations. These expectations were weakening before the pandemic. So in 2010, for example, we thought emerging market developing economies are going to grow around 6% in 2020. Now, when we look at 2020 10-year ahead growth forecast, that number went below 4%. So the growth expectations for the next decade declined by about 2 percentage points over the past decade. For advanced economies, something similar happened. In 2010, we were thinking that these economies would still grow around 2% over the next decade. Now, that number declined to 1.5%. Now, what happened is that I think after the global financial crisis, there was this understanding that, yes, potential growth slowed, but it took time to internalize that understanding. We had this period of serial growth forecast downgrades, 2010, 11, 12, 13, 14, that continued. Now, when you have these types of deep recessions that have consequences for long-term growth expectations as well as potential growth, and anywhere you look at it, depending on the recession, that impact is between 0.8% to 2.2 percentage points after 5 years, a decline in long-term growth expectations. Of course, when the long-term growth expectations decline, that has consequences for investment growth as well. Let me turn to the final question. What are policy priorities against this backdrop I discussed? And there, the single most important priority, the kind of the supporting the healthcare systems, accelerating vaccine deployment through global coordination. And we already see the challenges in that within nations and across nations. It's going to be the kind of the single most critical job for policymakers, really find ways to mobilize the forces to vaccinate large chunks of populations as soon as possible and get immunity at a level manageable to go back to some type of normality. Still, protecting the poor and vulnerable is a priority, as I mentioned, growth is coming back, but it's still going to be weak. In that context, the need to strengthen safety nets, and of course, given the kind of the debt challenges, providing coordinated debt relief to low-income developing countries is going to be critical for the global community. The policies for the near term, really keeping the economy afloat, still critical. That means assisting viable firms, improving insolvency frameworks for speedy bankruptcy resolutions, and supporting the demand. As you see, still large fiscal support programs countries are implementing around the world, and making sure financial stability is preserved. The broader challenge down the road in an environment the fiscal space is very weak is institutional reforms, and there the reforms have the kind of the usual scale and scope, but some more important than others. I think we learned that enhancing digital infrastructure critical, investing climate resilience going to be even more important in an environment. There needs to be significant infrastructure investment. Educational losses were critical during the pandemic. That had implications, of course, for potential growth narrative I mentioned, and finding way to improve education to cope with those losses. And of course, coordinating policies globally to address these global challenges, including climate change, trade-related disputes, and finance-related issues, going to be all critical. Now, is it possible to reverse this slowdown and basically keep the potential growth at a certain level? Our answer is yes. That will require basically very serious, comprehensive reform measures in terms of improving investment, in terms of bringing more women to labor force, and in terms of improving institutions to basically deliver higher productivity growth. If those are types of policies aggressively implemented, we think that potential growth could basically be kept at levels comparable with what we had in 2010s, rather than having a significant decline. One important message of the report is that when countries implement aggressive reform programs, financial market participants reward them by increasing long-term growth expectations. Good policies have basically better growth expectations associated with them, and bad policies have worse growth expectations associated with them. The bottom line is that this is high time for policymakers to really implement the types of policies to improve the long-term growth prospects. Of course, this differs from country to country, what policy is necessary, what are the big priorities. But there is no question, given the limited fiscal space we see in many countries, the institutional reforms with respect to kind of the business climates, reforms with respect to governance, going to be critical down the road. So let me summarize. The first question I asked, what are near-term growth prospects? As I said, the growth is back, but recovery is going to be subdued, and risks still tilted to the downside. The second question, how has the pandemic increased debt-related risks? The answer is that we were already going through the largest debt wave we have seen since 1970. Pandemic, in a sense, put gas into this fire, and we basically saw a jump in debt levels at historical levels. Now the debt at the global level close to 100%, which is basically a record. And debt-related risk much more magnified today. Of course, there is a significant accommodation in the system. Interest rates are low. These solvency problems are basically being masked with these types of accommodation measures. But let's don't forget that low interest rates are not a panacea when it comes to emerging market economies. They are subject to changes in investor sentiment, and high debt levels are kind of the main vulnerability for them. The third question was, how has the pandemic worsened growth prospects for the 2020s? We had kind of a weaker growth expectations in 2020s. Now those growth expectations even weaker because of the decline in investment growth, because of the human capital losses, of course, because of the impact of the pandemic on productivity. And we are worried about, we will basically have a decade of growth disappointments ahead of us unless policymakers act in an aggressive way. And finally, what are these policy priorities? Everything starts with very aggressive vaccine deployment and then containing the pandemic. And after that, basically countries taking care of their houses in terms of policies, but at the same time cooperating globally, addressing global challenges. So let me again thank you for this invitation. I look forward to the conversation and answer the questions. Thank you.
Great. Thank you, Dr. Kose, for your excellent presentation. I think this is really highly relevant and also was all our attention. You know, you have raised the four big questions, and of course, the key growth prospect for the world, and also how COVID-19 going to increase the debt-related risk, which is, I think, many countries should really pay attention to that. And also, what about our growth prospect in the 2020s? I mean, that's we're getting into new decades. I mean, we have to really be aware of that. And of course, you gave a very good policy priority recommendations, which I think are really highly relevant for all countries probably to adapt to their own situation. You know, save lives and you know, threatened by pandemic probably is the top priority, and protect the poor, the vulnerable. That's really the key, I think, as well, and maintain the you know, foundation and of the economy fundamentals, and of course the strengthening the policy and digital education, you know, all the structure going on. So thank you so much for your great sharing of this very enlightening but also highly relevant for many countries in the world, including China, of your new latest report.